Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. Sign up for a 1-week free trial, no credit card required, for access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Looking at Twitter GoPro X and CHK on the daily weekly time frame. So Twitter bulls, nice continuation, got up over that $20 psychological level. Still seeing upper wicks of profit taking, but the bulls are still above the upper Bollinger Band in breakout mode. So we do need to be cautious of normal healthy consolidation in the short term just because of what we have seen over the past 8 trading days. But if we lose that upper Bollinger Band, that will indicate the short-term healthy consolidation is coming. Right now, I'm looking at the lower wick of this candlestick back on Thursday of 1908 as a support the bulls want to hold and keep higher lows forming compared to that level. The weekly time frame for Twitter, we are in a range now with a complete lack of resistance. The next clear levels I'm looking at, 2065, 2110, and then looking at 2165. And those are really just because I have to find levels in this range. But in terms of significant resistance, those are not significant resistance. So the bulls have a nice easy whatever of things. And once they just consolidate on the daily, form a higher low, keep this uptrend going. And as long as the market stays bullish, these bulls do have some nice upside potential. GoPro on the daily time frame, another inside bar, getting a very tight range. 807 is the low of support. 827 is resistance. And if we break 807, we're looking back down at 8 psychological and 789. We rejected from the weekly middle Bollinger Band resistance yet again last week. We're rejecting from that level yet again this week at 832. And the Bollinger Bands is very tight here, so there's not a lot of room to be moving around. But the bears are still in control as long as that middle Bollinger Band is resistance. X on the daily time frame also consolidating. Not quite an inside bar as we did break to a lower low by 2 cents, but is very healthy sideways consolidation after a breakout. So right now I'm looking at support of 2314. If we break that more convincingly, we're looking down at 2246 as the next level, but we're just waiting for this upper Bollinger Band to begin ascending more rapidly to create more upside for the bulls. You can see every time we've tried to make a breakout on this oversold bounce, we've really barely gotten above the upper Bollinger Band before we fall back below it. We've been grinding against it. Now we're grinding against it again. And the weekly time frame made that bull break, must hold this level on a back test and close above 2311, the 200-week moving average, on the verge of a bullish MACD cross, on the verge of a bullish TCG cross. So we are looking good here, but we can't lose this level on the first back test of this support. So bulls need to see this continuation keep up. We have 4 trading days left to go. Ideally, they want to see that break of 2365 tomorrow to see a bull break of this tightening sideways trading and see that continuation. CHK on the daily time frame, looking like maybe now our lower high is set. We have to confirm a bearish candlestick to be confident that our lower high is set in this tightening pattern. This is another bearish reversal candlestick, but we have to see a red day tomorrow and a loss of 481. So we have our low, high of the bounce, which was just another lower high, higher low, lower high, and if we consolidate, we'll look for a higher low to form somewhere in the 460s or so. So a tightening range, not going to break anytime soon in my opinion. Weekly time frame certainly still favoring the bears, but you can see this MACD and these moving averages, the exponential moving averages, are leveling out a little bit. So starting to perk up a little bit, because if this daily chart does get a bull break of this equilibrium pattern, then we will flip bullish and look to play it for some upside. But that's not happening yet. We have this clear pattern that is going to play out eventually. It's going to take a bit longer, but we will be watching very close and continuing to monitor it. This is what I call stalking a trade and waiting for that clear break. That's what we were doing back here as $5 was still support. And it was the break of $5 after we were stalking that trade that had us look bearish, which has played out very nicely to the downside from there. And we're going to be looking for the same kind of pattern to form and then break of the pattern to indicate the trade. So I appreciate you watching. We'll continue checking back in, and we'll see you tomorrow.